All right, good morning, everyone. Welcome. I'm so glad all of you are here. I'm Laurel Garcia, the Senior Director of Continuing Education at the Texas Public Charter Schools Association. And today we are going to hear all about spending and accounting compliance from our speaker, Sachin at ProcureDesk. But before I turn it over to him, I just have a few of my regular reminders. So if you are here with us live, please remember to remain on mute unless you are asking a question, just so we can reduce any chances of background noise. Feel free to use the chat throughout the webinar to ask any questions that you have. If you're watching this as a recording, I'll read any questions posted in the chat out loud so you know what's being answered. And Sachin will also share his contact information during this webinar, so if you need to reach out to him directly with any questions, you'll be able to do so. The handout for this session was already uploaded into Charter Central, the same place where you registered for this webinar. You can return to the course listing, click on the title, and the webinar details, including the handout, will be located there. Once this webinar has concluded, you can return to Charter Central and complete a survey. And if you're watching this as a recording, you will also have to complete a quiz. After you answer all the questions, you can download or print your certificate for attending this webinar. And with that, I have finished all of my reminders, so I'm going to turn it over to Sachin. Thank you so much for being with us this morning.
Thank you, Laurel. Good morning, everyone, or rather, good afternoon now. Laurel, should we give some more time for, seems like other people might be trickling in. All right, so we'll just give another minute and we can then get started. All right, so it's almost 11:03. Okay, all right. I think we can get started. All right. Good morning, everyone, and my name is Sachin Sharma, and today's topic is why charter schools lose control of spending, and we'll talk today everything about your favorite subject, right? Compliance, spend control, and audit, and how to prepare for an audit. What are the requirements, and how other schools are doing that, right? So. We'll start with just setting up a quick agenda. We have 60 minutes together, and this is like a high-level breakdown of what are we going to talk about today. So we'll first start with first rating. We'll explain what that is. We'll then jump into understanding how spending actually happen in your day to day, right? How teachers are spending money. We'll talk about Amazon, which we see as the most common vendor being used for purchases. We'll then jump into how the current setup is when we talk about accounting systems. We're using QuickBooks as an example, but you might be using QuickBooks or you might be using Sage or any other software within your organization. What are they designed for? And where they fail when it comes to what we call them as autopsy tools, right? And we'll then jump into audit trap in terms of specifically we talk about FASRG requirements and what are the challenges with that. And then I'll spend time on walking you through how schools like you have done this previously, right? What were the challenges they were facing and how they overcome these challenges. And then we'll leave you with like a 30-day audit ready action plan that you can implement on your own to make sure that you're compliant and you have all your ducks in a row. And then we'll end it up with the Q&A. We'll spend a couple of minutes. So, feel free to, add questions to the chat as we go. And then Laura will kind of, take those questions and I'll try to address as many as I can in this session today. So, a brief about me, why you should listen to me. Again, my name is Sachin Sharma. I'm the founder of CEO of ProcureDesk. So, ProcureDesk is a purchasing and AP automation software. Essentially, it's the spend control layer that sits on top of your accounting system to help you manage purchase requisitions, approvals, compliance, and AP, accounts payable, vendor payments, all the process from requisition to purchase orders. So, a little bit about me. I have around 2+ decades of experience in procure to pay. So, anything that starts from like creating a purchase request to getting it approved to generating a purchase order to paying the vendors. Like I've worked with many companies to help them set up their processes. Personally, I work with close to 500+ companies now. And I've also been a practitioner. So for good, I would say a decade of my career, I was managing procurement and AP. So I have like first-hand experience of how to run these teams day to day, not just consulting experience with different organizations. Now we built ProcureDesk for one simple reason. When I was a practitioner, I was dealing with the same challenges with manual processes, paper-based process or spreadsheets, tracking all the spending. And we didn't have $1 million to spend on implementing a new tool. So that's how we kind of started ProcureDesk is to build a powerful spend management tool, which doesn't break your bank, right? That's kind of the genesis of how we started. And our mission at ProcureDesk is helping finance teams get better spend control. So have complete visibility in terms of what and where money is being spent before it is actually spent. And two is your audit season is easy, right? You're not dreading the audit season. It's everything is in check, compliance wise, and so on. I would love to connect with you and carry forward this conversation on LinkedIn. So, in the slides, if you click on this link, it'll take you to my profile. Feel free to send me a connection request. We'll love to connect there. With that said, let's jump in. So, the first thing we're going to talk about here is the FIRST rating, right? So, now if we talk about FIRST, that's Financial Integrity Rating System of Texas, which is administered by Texas Education Agency or TEA. And what it does, it evaluates the charter schools across 21 financial indicators, and which means you will land it up into there are 3 or 4 classifications. We'll talk about 3 here, right? So you got the superior, you got the substandard, and the F, which means you're working on it or failing, right? And typically, what we see out here is if you have a superior rating, that is what is required for expansion. So if you're looking to expand, you want to make sure you have superior rating. If you landed up in the substandard bucket, what that means is you have more scrutiny, more paperwork from TEA standpoint, right? So we definitely don't want to be here. And if you're failing, it can result in revocation of your charter, right? So that you absolutely don't want it there. So today we're going to talk about how we set up controls so that we stay in the superior bucket and don't go into substandard or failing bucket, right? And of course, the system is designed for or encourage schools to make sure that you have financial resources in order to or do the I would say optimum allocation of capital resources that are available to you, right? So that's kind of at a high level. Now, with that said, let's jump into the controls the auditors are looking for. Now, I said there are 21 points. I'm going to focus on these 6 here overall, and we'll get into more details. But if you just focus on the first 4, those are the core 4 that we need to worry about, right? So let's jump into it. So number 1 is the competitive bidding thresholds. What that is you have a limit of 50,000, which is the aggregate 12 months limit, right? So if you're going to spend 50 grand or more, different rules apply. So having the ability to have 3+ written quotes from different vendors. And of course, you need to maintain paperwork to make sure that you can tell auditors that you went through this process. And if you're spending more than 50,000, then you need a RFP or a sealed bid. right? So that's kind of high level requirements, in which is TEC 44.031. I'm not a specialist in each and every one, but those are the specific specifications, right? So making sure you are running a bidding process. So that's number one. Number two is segregation of duties. In simple terms, what this means is you need to have at least two people involved in the process or two humans involved in every chain. So, what you cannot have is a single person processing the entire end to end. So, what that means here is if a single person can create a request for purchase, they can approve it, they can mark it as received, and they can pay the vendor, then that is the opportunity for fraud, right? So that is, if you look at the fraud triangle, there needs to be a motivation, there needs to be circumstances, or there needs to be like in a loophole, right? This is the loophole we talk about. It's like, okay, if you are setting up a process where everybody and one person can run through this whole thing, that is a big no-no, right? So that's why segregation of duties is important. Number three is audit-ready documentation. So when auditors are looking for information, they are looking for the complete package that came along, right, from an acquisition standpoint. So if you have a grant, for example, and those grants have specific requirements, which we'll discuss later, but if that is the case, then do we have the purchase request? Do we have all the quotes that we received for this purchase before we actually made the purchase? Approvals, invoices, receipts, all that has to be in one single place as an approval package, right? As an example. So retention period varies. For federal grants, it's around 7 years, and otherwise it's 5 years, right, from a statute of limitation standpoint. So those are the top three. Let's jump into number four, which is ethics and conflict of interest. In simple terms, you want to avoid conflict of interest, right? So what does this mean in practice? That means no gifts or gadgetries from vendors. Don't take gifts. And if you do, it should be documented in your purchasing policy on what is allowed under what conditions and so on. But more specifically, if you have a conflict of interest with the vendor, then you should fill up a conflict interest questionnaire or a CIQ. So that should be in place. So for example, if you want to do business with your brother-in-law, as an example, there has to be a CIQ filled, right? Otherwise, there's conflict of interest here. So those are some of the examples, but those are the top four. If you don't take anything away from this presentation, just remember those top four, which is required from an audit standpoint. And number five is board-approved purchasing policy. So whatever is your current purchasing process, that needs to be documented. So you need to have a purchasing policy that's approved by a board. I would say typically it needs to be revised and readopted every 3 years. But if your purchasing environment is changing faster, I personally recommend you should maybe look at it every year and say, do we need to tweak anything in this, or this is good to go? Now, having said that, it takes time to get a policy reviewed and approved. So I understand doing it 3 years cadence is also fine. Number six is vendor oversight and debarment. So in simple terms here, you don't want to pay a vendor which is barred to work with government or any sort of impact negatively your grants. And for that, you have sam.gov, sam.gov, where you can go and search the vendor and make sure they are not on a department list, right? So they are just do that basic. And then you also need to do annual vendor performance reviews, and you need to have active guards against duplicate purchases. So you need to have a process in place that you're not paying the same vendor again and again for the same purchase, or the same product is not ordered again and again unless you really need it, right? So those are some of the examples. So those are the top six. Just to kind of summarize, competitive bids for less than 50 and a RFP, segregation of duties, make sure a single person cannot do the whole process end to end. Three, keep documentation. 5 years versus 7 years, depending upon what kind of grant it is. Ethics and conflict of interest. So fill up a form like a CIQ form and so on if there is a conflict of interest. Number five is board approved purchasing policy. So have something in place that everybody's reviewing. And then the vendor oversight and department, right? So that's number six. Okay. So we talked about the key controls. Now let's jump into what really happens day to day, right? So this is our typical experience when we start working with schools. And here's a process we typically see. We call it reactive accounting. And that is not by design, that's how it actually happens, right? So typically, large purchases are fine, but the day to day, like office supplies or school supplies and so on, your staff members are buying supplies. They might be either buying it on their personal card, or you have like a P card, or whatever the case might be, or someone has a card, and they go make the purchase paid by a card, and then the receipt lands up on the accounting desk maybe a couple of days or weeks later, and then you record in your books. That is the time you actually figuring out if, one, is it over budget? Two, do we really need any documentation because this was supposed to be from a grant money and grant has specific requirements? Maybe it is restricted versus unrestricted grant and things like that, right? So if you do not have a purchasing process where these things are happening before you make the purchase, you're basically recording what has been done, right? So that's why I call it managing by autopsy. You basically have the data which spend has already happened. You're just recording it. So that's kind of the main thing we see. So today's goal is I'm going to walk you through a framework on how you make this move from reactive to more proactive spend control. So you actually see the spend before it happens and you can manage everything from there, whether it is compliance, whether it's approval, whether it is conflict of interest, and so on. Now, so the first thing we'll jump into our section one is what we call the Amazon effect. And I'm using Amazon as an example, but you could replace Amazon with any vendor from where you buy supplies. So here is kind of a typical case, which we see from day to day. For example, a teacher needs to buy a STEM kit. That needs to be there by Friday, for example. So, and Amazon delivers by Thursday. If you paid on a P card, the receipt maybe comes back Monday, a day after, whatever the case might be. The problem is if it was against a grant, now you have a big issue, right? So it's not always about the money part, like, and how much are you spending? It's also about like from where you're spending the money. And if it is tied to a grant, you need to make sure you are kind of satisfying the requirements of the grant. And two is also whether you have the budget in place or not, right? A lot of times we see schools having this awkward conversation at the month end and say, "Oh, geez, John, you went over budget. Let's figure out how do we adjust it going forward." So if you have a more proactive process, that does not happen. This whole thing of people buying supplies and so on, we call it Maverick spend. And the definition is purchases that are made outside the formal procurement process. And the key insight from our perspective so far, what we have seen is it's not that staff wants to bypass the process and do what they want to do. It's just that the current process might be too painful. Like if you want them to go print a form, fill it up, scan it, or walk to somebody and get it, two people needs to sign, then they go and purchase it. By the time they make a purchase, it might be like a week from they actually originated. By that time, they forgot why they even need it, or they might not need it at all at that time, right? So that's kind of the main core crux issue we see is the current processes are so laborious that they'll end up just either completely ignoring it or bypassing it. So what does that mean, right? So let's use an example where something was purchased using P card stands for procurement cards. So whether it is your credit cards that you have issued or like you have a one card which everybody's using, that is what I would refer to when say P card. So when we look at, let's say, EDGAR, right, Education Department General Administrative Regulations, and if you have anything with Title I or IDEA or other federal grants, there are three things, right, which are required. So all purchases using federal funds require prior authorization through a documented requisition process. So you need to have a requisition in place. Whether it is filling up a paper form, spreadsheet, whatever the case is, that is a must. Second is there is no retroactive approval, right? So a lot of times, if you're creating an invoice, you receive an invoice from a vendor, and now you're proactively going and creating a purchase order, that does not count. And we see a lot of people doing that. It's like, okay, um, people spend the money. Now we need a system or a place where we can create a purchase order request. And it's the other way around. You need to create a purchase order request first, then the spending needs to happen, right? So a $300 Amazon example we were talking about is if this was charged to a federal grant without a prior requisition, then that's not allowed. So what is the impact of all that? There are a couple of aspects to think about. Number one is if it's a disallowed cost or whatever, right? You need to repay, or repeat findings could lead to more scrutiny or grant suspension, or it could appear on your first rating, right? So even a small purchase like that, which is against a grant, could cause these issues. So time for the first poll, just so I get a sense of, who we're talking here. Laurel, if you can push the code. All right, you see it on your screen now. So I'll give it a few minutes to see overall. I'll just read through what we are asking here. So what are your budget blind spots, right? So number A is the Amazon black hole, reimbursements and P cards, or facilities and maintenance emergencies, handshake vendor agreements, or work starts before the PO, or subscription auto renewals. All right, we'll give a few more minutes. Okay, so some of the results are coming up. All right. Okay, so perfect. So let me just walk through these results real quick. So, 67% is subscription auto renewals we forgot about, and then facilities and maintenance emergencies. That's again very common use cases where we see budget blind spots and subscriptions so much because many organizations don't have a central place where they track their kind of vendor contracts or subscriptions. And the only time you discover it is you see a charge on your credit card and say, "Oh, what is this about?" And then you start investigating and realizing it's a contract that auto renewed. And facility maintenance, again, I think it comes down to the process. Again, it's like, okay, you need something for emergency and you do not have a process. So which means people are just buying. So perfect. So let's jump further. I'm going to, all right. Okay, I'm going to stop sharing and we go to the next one. Or can you remove this poll? It just keeps coming back. All right. Thank you. So let's jump into section number 2, where why your current accounting systems might be failing, right? So we use QuickBooks as an example, but our clients, our school clients, have a lot of different systems. So I'm just using it as a kind of example, right? So whether you're using QuickBooks, Sage Intacct, and so on, most of the times these systems are designed for, of course, managing the books, not for managing your purchasing process or day to day on how purchasing happens. So typically what we see is you're entering your invoices directly into the system, or your credit card expenses, or the payments that have cleared, and so on. In all, it's actually a track of the money that is already spent, right? So if and again, from a compliance standpoint, you need to worry about the control, like what happens before you spend the money. And of course, you're still recording in your books, right, in terms of when somebody spent. So what it does not show you is if you have any purchase orders that are issued to the vendor. Maybe you do have a purchase order process. Either you're using, some simple form to fill it, or in just a email, whatever the case might be. So it's committed spend, but it's not invoiced yet. Or you have a requisition process. So all the items that are approved, but they are not ordered yet, right? Just you're waiting for somebody to go and place the order and so on. You may have verbal commitments, which are made by different department heads or principals, and that is not accounted for as well. So let me take an example of what I'm trying to convey here. Let's take an example of, let's say you have $10,000 budget. And if actual in your books is 2,000, so actual is any invoice that you have received against that budget, any credit card expenses, and so on, right? So if you look at your books view, it tells you you have $8,000 remaining, which makes perfect sense. You have 10,000 in budget, 2,000 you have spent. However, if you look at reality, there might be few other things that are going on which are not factored in. So let's talk about what those are. So let's say you have any open purchase order, which means you have a purchase order which is issued, but it's not invoiced. In this case, we'll let's say call it $4,000, right? That's an example. You might have few items that are pending to be approved or waiting in your approval process, and they're not approved yet, or they're towards the last step of approval, right? That's the 3,000. So in reality, if you see your actuals is true, anything that is booked is 2,000, but there are a few others that you need to factor in when you're making decision on whether you have the money to spend or not. So really, if you add this up, right, it's 2,004 3, that's $9,000. So it's actually $9,000 that you have either a issued purchase orders or it's about to be spent versus what's actually in your books. And if you see the difference between that, there's a $7,000 difference in available money. That's one of the biggest reasons why we see people going over budget, as an example, where you have different spending happening from different sources, but it's not in your single source of truth, which is your QuickBooks or your accounting system and so on. So again, quick another poll. So we could see like how well you guys are managing this. So how confident are you that your budget domain number is 100% accurate today, right? So A is very confident, you got everything right. B is somewhat confident, kind of have a spreadsheet where you're tracking it. Sometimes it's updated, sometimes it's not. Not confident, it's I only know for sure at the end of the month when you kind of get the transactions booked against the budget. And then I live in a state of constant surprise. It's like, okay, I don't know what's going to be this month, right? So let's pause for a few minutes and give everybody to kind of respond. By the way, research shows, recent research, I think we were looking at around 68% of school districts experience budget overruns because they don't have visibility in terms of what is coming unless they book those costs. All right, so we see, perfect. So I see like equal split. Perfect. So I think very confident, which is great. I think you got it, everything covered. Awesome job. Someone confident, we have a spreadsheet like, and 33% there, and not confident at all, 33%. So I think it's very typical of the process, right, that you have, right? If you have a proactive process, you can figure out exactly where things are. And if you don't have a proactive process, this could result into surprise. Okay. All right, gonna take a sip of water and we jump right back into this. Okay, so now we're going to jump into kind of high level. We'll talk about the requirements from an audit standpoint more in specific details. And then we'll jump into a section where I'll kind of walk you through some case studies and how to actually do this, right? So Texas has a rule book, which is the Financial Accountability System Resource Guide. And don't worry about all this. We, towards the end of this presentation, we have included all these resources for you, so you can just go and visit if you want to dig deeper into all of them, or maybe put it in Chat GPT or something like that and summarize it for yourself, right? But really, I mean, one thing which I want to highlight here is that the requirement there is that proper authorization must occur before the obligation is incurred, right? That's kind of the key requirement. So what does that mean? It means three things. Number one, you should have a purchase order, or what we call PO. It must exist before the vendors start the work. So which means you have gone through the authorization process. And a PO must exist before the purchase is made. and the PO must exist before the invoice is generated. Right. So those are kind of three things: is that you need to have authorization. You need the vendor should not start the work before you issue a PO. And number three is you should not retroactively create purchase orders once you receive the invoice, right? So those are kind of the three key requirements. So one of the things which we see a lot when we are talking to our customers in terms of like what are the audit findings is this, right? Is the PO after the fact. So, for example, you received an invoice on Monday, March the 3rd. You go and try to create a purchase order for February 28th and so on, right? And that is you're going to kind of quickly figure it out, right? This is what auditors look for is the paper trailing practice, right? How did you actually create the PO? How was it created, and was it before or was it after? Now, if you're using a system, most of these systems out there kind of force it in a way that you cannot just directly date the PO for before the invoice. So it is de facto taken care of. But if you're generating this manually, like you're kind of putting in a request, it's very common to kind of put a date behind the invoice, right? So, oops. So what does mean for paper trailing, right? Is when we see the audit results, a couple of things, right? This will show up as a formal audit finding if that is what is happening in the organization, right? It means you would require corrective action plans, and which also means it has potential unfavorable indicator in your first rating, right? And future audits, you'll have high scrutiny. So avoid doing this if you have need to make a process change so that your purchase orders are created first before the invoice. And again, going back to this slide, right? These are the three things you need to know, right? The PO must exist before the vendor starts the work. PO must exist before the purchase is made, and it must exist before the invoice is sent. So if you do these three, this is taken care of very well. All right. One more poll, and we have total four polls just to be, I wanted to kind of keep it interactive so we know, like, where you're coming from and what's your current process maturity is. I'm just curious, what are your auditors telling you, or what's the most feedback you're receiving from your auditors? Either missing signatures or documentations, PO dates don't match invoice dates, lack of competitive quotes, like formal bidding process is not happening, or really your team is doing great and there's no further changes required. So give it a few minutes for everybody to respond. All right, so I'm seeing some responses coming in. Okay, we'll give one more minute. All right, so okay, so far I see 50 and 50, so missing signatures, and then your team is doing great. I think if your team is doing great, that's awesome. You should present the next webinar in terms of how to set these things up. But if you're missing signatures, this is typically what is happening is either one of two things. You might have a missing purchasing policy in terms of where everything is clearly defined in terms of who needs to sign, or B, you have a manual process where people need to print something in and so on. So this can be either resolved through some sort of like a e-signature process and making sure you have a documented policy, right? Those are the two things. All right. So let's get into it now. So we'll share some case studies now in terms of what we have seen with other clients, what are the challenges, how they kind of overcome it, and so on. So we're going to talk about two case studies here. Howard Gardner MI Charter School and School in the Square, both are charter schools. And they were dealing with different sort of issues, which I'm going to walk you through. I'll kind of walk you through what was their current scenario, what were the challenges, how they overcome, and so on. And the key takeaway here is you don't need to overhaul your current process, right, to fix these things. Sometimes it's one change that you need to make in your overall procurement process to satisfy the audit requirements. So the first one was Howard Gardner, right? So we kind of high level, they went from 7-day paper chase to same day approvals. So the process there was they, of course, were taking care of compliance, which means everything needs to be documented. So they started with the most obvious thing, which is a manual paper-based process. So they had a requisition form which needs to be printed. They had a defined purchasing policy, which means everybody clearly knew where it needs to go for approval. And once it is approved, it needs to go to the business manager for them from a finance standpoint to make sure that the budgets are checked. And then it'll go to a buyer who will place the order. And on an average, it could sometimes take 7 business days. Now, the reason it was taking so long was, of course, it's stuck on somebody's desk, right? So it's like you need to approve it. People are busy, and if you're doing it manually, who has time to kind of look at the paper stack and sign and things like that? So it could took up to 7 days. And that was one of the, somebody mentioned one of the previous polls is facilities and emergency purchase. Is facilities was one of the things. If you need to fix something urgently, you're not going to wait for 7 days. You'll probably go to Home Depot, swipe, whatever you're looking to purchase, and then just buy it, right? So that was one of the things we worked with them in terms of setting up a process where people can make the required purchase when they need to make the process easy, and so on, right? And a lot of times, teachers were bypassing the process in the sense that they'll just say, hey, we put the requisition in, nobody approved for another 7 days, so we just went ahead and, put it on my personal card, so now reimburse me. So what we did was the fix was, of course, we implemented our tool ProcureDesk, which integrates with their accounting system, in this case, QuickBooks, so that all the data stays in ProcureDesk from a control standpoint. And when the controls are met, we'll send the credit card expense or the bill back to QuickBooks. We implemented a punch-out process for teachers so that they can quickly figure out what they need to purchase. From Amazon was one of their major purchases. So rather than having a very long process, everybody having a username password to log into Amazon, we simplified for them. And we'll walk you through in a minute what we did. And of course, the entire approval process was automated. So everything was digital approval workflow. So instead of physically signing the documents, it was digitally signed because now you are kind of reviewing and approving within the system, which means if you need to kind of go look back at any time regarding your audit requirements, it's there, right? You just need to run a simple report and you can get everything. So the result of all this was the order purchasing cycle, the over process cycle for purchasing went down from 7 days to less than 24 hours, right? We eliminated 95% of their purchases that were on paper. We still have few things that are like require paper for that, and we're working with them on that, but mostly that's what results. And Amazon spend is now fully tracked, approved, and audit ready. This is what it looks like in practice, right? So you have like a requisition process where employees put in what they're looking to purchase, like for example, in this case, some monitors, some fire extinguisher tags, and so on. Each of the items are coded to the right GL upfront, right? It is tied to the right budget or the grant, and you're checking for, do you have the money in the budget proactively? And if there is no money left, you can stop the purchase from happening or send it to for additional reviews and approvals, right? So everything is digital, and then your approvals are also done digitally, right? Everything is timestamped and so on. So there's no need to physically sign documents and things like that. And everything is digital. The second thing is, this is what I was talking about, the Amazon experience. The way we implemented Amazon is they can now access Amazon within ProcureDesk by just clicking on a link. It takes them to the Amazon portal. There's no need for shared login, username, passwords, and so on. With one main difference though. You can go and start making the purchase. You select what you want to buy, but now you have to hit the submit order for approval button. What this does is it takes information back into ProcureDesk. Now it is going to check for budgets and things like that. So the idea here is that we want to keep the experience same for your employees or for teachers so that you're not creating friction from an adoption standpoint. They just use Amazon, but with main differences, now spend control is in place, right? So that's kind of how we did it for them. Now, we'll talk about another case study here, School in the Square. Yeah, around, I believe, 1,000 kids or more. They have two locations. And the biggest challenge for them was tracking budgets. So, and the challenge was they did not had a PO process. Well, they had a PO process, but it was highly manual. And budgets were maintained in a spreadsheet. And when they go through the month-end process, there was always a challenge in terms of, oh, we went over budget, so now we need to figure out what we're going to do for the rest of the months. One of the other challenge was, when we were working with the director of finance there, she was mentioned that CFO wants to get complete visibility in terms of where the budgets are. And a lot of the time we didn't even knew where we actually are from a budget standpoint because we can only tell what's in the books. If there was like a PO out there, which is not, and like for which we haven't received the invoice, it was not in their system. So it's very hard for them to know where things really are. And the result of that was they also got surprise invoices, including one of them, which is $50,000. And it's not that it was like a complete surprise, but from a cash flow planning standpoint, they were planned like a 6 months down the line versus now. And that causes like shifting some of the budgets and so on. So what did we do to kind of fix that? Right. So we did a couple of things. Of course, we set up a process so employees can use that upfront, right, for buying everything. So you have complete visibility in terms of what is being purchased. But more important, we implemented a budget check at the time of creation of purchase requests, not at the time when the things are booked in your accounting system. So if I need to buy supplies, for example, I'll pick my budget and system will tell me exactly how much is left in that budget. And if I don't have any money left, I need to go figure out with finance what I'm going to do because the system is not going to allow you to move forward. Over a period of time, they made it in such a way that the finance approvals were also baked in ProcureDesk. So now, if there's any additional finance approval required, that will also happen here. The third thing, of course, is CFO now has complete visibility. We built them something called open order report and a budget report. So budget always tells you either A, what is already invoiced, what is yet to be invoiced, and what is blocked for purchase. Blocked means it is being reviewed and approved, but is not fully approved yet, right? So they can see exactly where things are at any given time without going to their books. So result is no more surprise invoices. Every dollar is tracked from the moment it's requested. Budget conversations with principals is based on real data and not estimates. So they're not talking about, okay, yeah, hypothetically, you're going to be based on the averages. This is the forecast looks like. They're actually looking at their open order report and having conversations based on that. And finally, the audit preparation reduced significantly. They're not spending a lot of time trying to figure out or answer audit queries. They go to the system and they can pull everything from there. So this is what it looks like, right? From a budget standpoint. So imagine in your purchase requisition process, like if you have a proactive spend control process, your budgets are always displayed and you're controlling who can see what budget, right? So for each teacher, you might have a supplies budget and so on. You might have different grants from where the money can be picked. It's shown all up front. And then you can see, okay, what I'm requesting, how much is available after the purchase, right? And what's my total budget? Like what I've used, what is still pending, and so on. All that can be done from one single place. So this ensures that if you have any specific grants related documentation, you can ask for this, right? So if it is a restrictive grant, for example, somebody can validate that, or you might want them to provide more additional information at the time of request. That can also be done, which means you can run a report like this and see overall month over month how it is happening, right? So for example, for each month, what's my budget amount, what's my consumed amount, how much of the total budget we have consumed so far, because it captures everything. It's not about just what's in your books. It's about on what's open right now, what is on credit cards, what is yet to be invoiced, all that in a single place. Okay, so it typically when we see this pattern, right? So every school we have worked with, this is kind of the three problems we have solved for them, or these are the problems you can solve for yourself, right? Number is the visibility problem. So in the old state, they saw the spend after the fact. In the new state, once they have better visibility, they see spend before it happens. From a process standpoint, it was mostly spreadsheet driven versus In the new state, it was digital and fully automated. And from a compliance standpoint, it was more retroactive documentation, right? Trying to figure out once the spend has happened where the documentation is versus pre-authorization that's built in the system. So those are the core areas you want to focus on, right? Visibility, process, and compliance. So what does it look like for you, right? So this is kind of like what an end-to-end process looks like if you want to set up a system for this, right? This is how we also manage this in ProcureDesk, right? So essentially, it's a single system that kind of manage everything, right? So imagine step one is a teacher goes in, put in information for what they need to purchase. Two is you do a budget check to make sure the budget is in place. Number three is you route it for approvals, make sure the right person is approving that purchase, right? Number four is PO is issued to the vendor. And number five is when you receive the invoice from the vendor, you are matching the invoice with the PO and the receipt, also called three-way match, to make sure you're paying what you agreed to pay and it is received. You're not paying for something that you haven't received. So just because Sally ordered it, you're not going to pay for it, right? Sally probably need to confirm and say she has received the product. And then final step here is making sure it is synced with your accounting system. So it is already pre-coded in terms of the right GL, right class, or right department, and you don't need to worry about entering the data again in your accounting system, right? So that's kind of end-to-end process. So essentially, what you're doing is you're consolidating your purchase, right? So here, if you today, we're just giving an example of multiple tools to one system, what it looks like, right? So we see this very common. You have paper acquisitions, you got email approvals, you might have Google Sheets, you got P cards on Amazon, teachers reimbursement, right? You're just issuing reimbursements if somebody spend money on their personal card, text messages for purchases, right? Vendor emails, data entered in QuickBooks, some not, paper grant files, and so on. And the cost is, of course, the process, right? It's highly manual. But more important is, since it is so distributed across different things, you have a compliance problem. So the way to look for this is you need a control layer before the data goes into your accounting system, right? And this is what we provide with a system like ProcureDesk. Now, I'm using ProcureDesk as an example. You can replace it with anything that you have for a control layer standpoint, but your control layer should take care of your proactive PO workflows and approvals. So all the purchasing policy that you have in place, that needs to be automated, right? So that way you are not basically relying on somebody's memory to figure out where it needs to go for approval. You should integrate your budgets along with it, right? Make sure your grant and fund coding, it's all kind of taken care of. So you have a process where if I select a grant, what chart of account it should go to, where it needs to be routed for approval, all that is well documented. And you're also making sure that you are matching your invoices with receipts and purchase orders, right? So if you ordered something, did you receive it? And is the vendor invoice the same as what you ordered? I think those are the key controls, and not just from a overall compliance standpoint, but also from a good spend hygiene standpoint, right? You want to be stewards of grant money, and you want to make sure that it is spent at the right place. And then finally, you have audit trails and reports. And then finally, the data goes into your general ledger, right? Whether it is QuickBooks, Sage Intacct, or anything like that. All right, so we'll just, in the interest of time, I'm just going to quickly walk through some of these, right? So first of all, what a reactive and proactive design look like, right? So a reactive design is more, chasing receipts, backdating POs, trusting the QuickBooks numbers, finding overruns at month end, and scramble before every audit. Versus proactive design looks like, hey, everything hits your inbox first for approvals. PO exists before every obligation, so you are meeting the FASRG compliance. Real budget numbers, so that budgets are always updated. You're not guessing what your actual usage is. You are running a report that tells you everything, right? Just your actuals, your open POs, pending approvals in one single view. And you're capturing the overruns from a budget standpoint at the time of requisition, and you're always audit ready. So What you can do today, right? Or this week. Let's talk about that. So this is your 30-day audit plan. These are some of the things that you can implement today, right? Number one is if you have a paper-based process, just digitize it. It's going to go a long way in terms of driving adoption and making sure you're audit ready, because it's always easy to use a digital process to figure out, from an audit standpoint versus going looking up paper and so on, right? So that's number one. Number two is centralize your purchasing. So if you have, like, for example, I'm using Amazon as an example, if you have shared passwords and so on, just set up a system where everybody goes in through a process where they're coding it to the right expenses and so on. Number three is you can enforce no PO, no pay. So if you are receiving a lot of invoices and people are not following the process because nobody wants to create a purchase order, it's always easy, right? Call the vendor and they will deliver the product. Why create a purchase order? You can implement a what's called a no PO, no pay. So, and that needs to be documented and explained to your vendors that if your invoice does not have a matching PO number, you will not be paid. Now, sounds easy in theory. It's hard to implement, but you can always start with your top 10 to 15 vendors. So if I were you, I'll look at my spend and I'll focus on the top 20% of the vendors that contributes to 80% of my spend. Make sure we have a PO in place. That'll make sure that you're not creating purchase orders post the invoice. And then enforce real-time budget visibility. So make sure that people are checking budgets at the time of creating the purchase request, and you're not relying on month end to figure out where you are on the budget, right? So those are the 4 steps. Any one of them will move you close to an audit process. All right. So in terms of next steps, where do we go from here, right? You got the plan. These are like 30-day plan. Now, what we have done is we have mapped everything from you, whatever we discussed today. It's on this website. You can scan the QR code or go to procuredesk.com/TPCSA, and where we just kind of walk through like all the resources that we discussed today. But more specifically, if you want to see how this works in action in terms of the end-to-end process, those 6 steps we walked through, you can book a 30-minute walkthrough with one of our team members or product experts, and they can kind of walk you through and say what it really looks like in practice. So again, you can scan the QR code, it'll be along with the slides, or you can just click on the link here. Right, so the final poll, and then we'll open up for questions. Here is, what would you fix first? I'm just curious, what's your takeaway from here? Would you get rid of manual data entry, or give principals a real-time view of their budgets, or end the Amazon receipt chasing nightmare, or automate the audit trail for funded grants? Okay, we'll give it a few minutes. All right, so I'm seeing some results coming through. Okay, we'll give it a few more seconds. All right, so looks like it's across the board. All right, so some of you said getting rid of manual data entry, ending Amazon receipt chasing nightmare, and automating the audit trail. I think I would agree. I would say I'll fix the automating the audit trail first, because that's the first thing auditors are going to look for. And then, of course, then you focus on manual data entry and paper to kind of goes hand in hand, to be honest. But love the findings so far and the takeaways. Appreciate that. All right, and so it's kind of few of my last slides, but here is how, if you're a CFO on this webinar, right? I just want to kind of paint the picture of what a reactive versus proactive approach looks like, right? So reactive is discovering overspending in month end, scramble before audits, chasing receipts, explain surprises to the board, or managing by Autopsy, right? So, and proactive approach looks like prevent overspending, you maintain continuous audit readiness, receive documentation automatically, reports are clean, predictable financials, and managed by design, not by surprise. So, couple of things you can do, right? Further, to your 30-day plan, you can audit your current blind spots. So if I were you, I'll just look at your last 3 months of transactions, right? Whether it's P cards, whether it's invoices, and so on, and really ask this one simple question: what is your compliance rate? how many had prior authorization, and how many are like, purchases from online vendors where you have limited control on how people buy. That's your baseline. So you want to set that clear, right? Number two is test your budget numbers. So pick your top three budget lines and see how accurate they are in terms of, does it factor in everything, in whether it captures the what's already open versus not only invoice, right? Invoice you're going to go get from your books, but where do you stand from your budget standpoint? And third is, we said, start with one policy change. If I have to pick, I'll start with no pay. No pay or no pay is the most, I would say, impactful change, but also a little bit hard to make a change. But if you can make that change, that'll go a long way to make sure rest of the process is taken care of. So if you can do one thing to change your audit compliance or increase the compliance, this is what I would do. All right, these resources are available to you. Like, these are all the resources we discussed today. We have added links here, as I mentioned before, so you can kind of go visit this and read more about them. If you go to here, if you scan the QR code or just go to this page itself, we have also put the same resources there. So you just have one single place to kind of go look at all you need. And all right, this is just kind of high level, summarizing it one more time, and then we'll open up for questions. So this is the dedicated page again, right? Every tool, video, control, demo we referenced today, we just put it for one single resource for you. And here you can find the first audit controls, the product walkthrough if you want to see how ProcureDesk works, and you can if you want to get into more details, you can set up some time with one of our product specialists. With that, I will open up for questions or any questions that has come up.
Yeah, I'll give a minute for people to maybe generate some questions. They're welcome to put it in the chat or to come off mute. But while they are thinking of some, I just have a quick question because I previously worked at a school, now working at the association. We use an Amazon business account, but sometimes, people forget. They accidentally order on their personal one
Yeah.
or they don't go through the process. How do other schools actually enforce the switch to using that Amazon business account?
Yeah, great question. And I think we've seen this so many times, right? People just go to their personal accounts and they forget about it. So the easy way to do this is you can open up a business account with Amazon, and it kind of serves two purposes, right? So number one is you can just set up your process in a way that everybody who needs to purchase, you can set up different username passwords for them, right? As an example, so they have to go there. And second is that there's the advantage of business account is that you can get discounts and your pricing is locked for a week. When we implement ProcureDesk, we actually bake this whole process into ProcureDesk. So they don't have to go anything. They don't need to remember any passwords. They log in, they see the Amazon logo, they click on it, it automatically directs to the business account. So that's a major change we would advise is like, okay, stop people, going to like, don't give them username passwords, just use a system where it's automatically directing it, and that'll avoid all these confusion.
Okay, I love that. Let's see. Any questions from attendees? I probably have time to ask one more. Specifically to charter schools, because we work with all size charter schools at the association, small, medium, large. But something that I have heard from some of our smaller schools, maybe they only have one or two people in staff in their finance team, or they're using back office providers. What
Mhm.
do those smaller organizations need to do to get audit ready if they don't feel as though they can afford to do a big implementation?
Sure. So I would say, I would start with looking at, some of the controls we talked about today, right? So if I go back to this slide here real quick. Okay, here, right? So these are some of the controls that you need to implement. So even if you have a small team, you can document, and I'll start with making sure I have a purchasing policy in place. So setting up a purchasing policy where all your controls are documented, and then I'll focus on the top four, right? So making sure segregation of duties is there. Even if a small finance team, if you have a buyer and AP person and it's the same person, that's a complete no-no. You want to segregate that out, right? And then making sure you have audit-ready documentation so that you're storing all the documents, which means you got to start with some sort of process. And you could use a spreadsheet if you want to. You could use a system like ProcureDesk. It takes, maybe 1 or 2 weeks to implement, so it's not a heavy implementation. But you could start from whatever. But this is what I would focus on if you are a smaller finance team.
Perfect. Okay, I know we're right at the hour. So, we'll have your contact information within the recording. So if anyone has any questions, we'll make sure they are able to reach out to you or to use that QR code if they want to see more. Thank you to everyone who joined us live and participated. I really appreciate you all answering those polls. And huge thank you to Sachin. This was a wealth of information, extremely thorough. I feel ready to go through an audit right now. So I very much appreciate you taking time to come chat with all of us about this incredibly important topic. So with that,
Thank you
everyone,
all.
yeah. And with that, everyone, please remember to fill out your survey to get your certificate. And with that, I hope everyone has a good rest of your day.
Thank you all. Have a good one.